Are expectations too high once again? Just it's been a positive week after that pullback we had over the prior couple of weeks.
Thanks for having Barclays. You bring up a good point with the sector doing well. The stocks, they have more expectations in them than they used to. So we think that expectations for Exxon, they're running rather high into the print. And it's exactly what you said. The stock is up 50% year to date. Positioning is very positive on it. We're about around consensus for EPS at $3.99. We think that the buy side is actually higher than that, so the pressure is on.
And in terms of the numbers that we're expecting, aside from the earnings, you're also quite focused on possible buyback announcements.
Yes, I think cash returns are definitely a driver of stock performance in the sector. And the companies, they appear to be wanting to up the ante on themselves all the time because investors are demanding it. So, we think that between Chevron and Exxon, with Exxon, they just tripled their buyback announcement last quarter, going from 10 billion all the way to 30 billion. So we're not expecting that they're necessarily going to move that guidance point again, but we could hear some commentary about whether there would be some acceleration in that 30 billion. For Chevron, we do anticipate that they will raise the bottom end of their buyback guidance, which is currently 5 to 10 billion. Maybe it's 8 to 10, maybe it's 9 to 10, we're not sure. We're already modeling about 10 billion of buybacks for the year. And we think that the market is also expecting at the top end at 10 billion. So again, the bar is very high.
It's really interesting, this focus on buybacks when the stock's up 50% or so year to date. And it brings up a point, which is these stocks are still cheap relative to the S&P 500 and some other sectors. But actually, you compare them to some of the names over here where there's, I guess, some reasonable comparisons in their business models in a way that doesn't apply in all sorts of other industries where the US crushes us here in Europe. But are they cheap enough to be focusing so heavily on buybacks?
We think so. I think that the companies are making a lot of money now because oil prices are constructive, because they've embarked on this whole capital discipline endeavor. But let's not forget that, this sector had years and years of underperformance. It was the worst performing sector for a number of years. We think the valuations still have upside for Chevron and Exxon. We think there's about 20 to 30% upside to our price targets right now. And if you look at energy in general, on the upstream side in the U.S., we calculate that it's pricing in about $60 WTI, and that's a 30% discount to the forward curve. So there's still a lot of value there in energy.
And just quickly, Janine, clearly they're hedged in terms of the inflation we're seeing because oil prices have been rising as well. What about on their cost side? Are they insulated somewhat from the inflation out there?
Well, we don't think anybody's insulated from inflationary pressures. All of our catch-up calls would suggest that the earnings year to date have suggested that inflation is running really high. But there will be winners and losers in inflation. And we think Chevron and Exxon, having hugely diversified portfolios, tremendous scale, and competitive contracting strategy, we think they're going to be among the relative winners, but they're not immune.